So the question is, could a new law aimed at helping retirees actually cost you more in taxes? Well, millions of people could see bigger social security checks, but also a surprise tax bill. So let's break it down. The Social Security Fairness Act is one of the most impactful changes to retirement benefits in decades. It targets an outdated system that penalized public servants like teachers, police officers, and firefighters. But while this law brings long overdue fairness to millions of retirees, it may also come with hidden financial consequences, especially when it comes to your taxes. Now, this video explains what this law really means, how your taxes might change, and what you can do right now to protect your income. Trust me, if you're on Social Security or expect to be soon, you need to hear this. So, for 2 decades, two little known rules called the windfall elimination provision and the government pension offset reduced or even completely eliminated Social Security benefits for anyone who worked a job that didn't pay into Social Security. So if you were a teacher in Texas, a firefighter in California, or a police officer in Illinois, and you also worked a second job where you did pay into Social Security, well, your benefits were slashed. Even if you paid in for 20 years elsewhere, and if your spouse was the one who earned Social Security, well, you couldn't collect on their record either. That's right, even as a widow or widower. But now, the Social Security Fairness Act has overturned both of these rules. And the change means millions of public sector retirees will finally get their full Social Security benefits, or in many cases, become eligible for benefits that they were previously denied. Monthly checks will go up, sometimes significantly, and for many, a retroactive lump sum payment will also be issued to compensate for missed income since January of last year. But here's where the IRS comes in. See, anytime your income increases, yes, even through Social Security, it can affect your tax liability. Now, while Social Security is not fully taxed, the more income you receive, the more likely a portion of your benefits will be subject to income tax. So if your total income as an individual exceeds $25,000 or $32,000 for married couples, up to 50% of your Social Security income becomes taxable. Cross the next threshold, and that number rises to 85%. So if this law raises your monthly check by hundreds or even thousands of dollars a year, you could unintentionally trigger those tax thresholds. Now, for some retirees, that's going to mean paying federal income tax for the first time in years, or paying more than you expected. But that's not the only concern. See, larger Social Security checks can also push your total income high enough to increase your Medicare premiums through a penalty called IRMAA, and that's short for Income Related Monthly Adjustment Amount. Now, these surcharges can hit retirees hard, raising the cost of Medicare Part B and Part D by hundreds of dollars a year, all because your income jumps slightly. And the income threshold for IRMAA is lower than most people think. So that means a well-meaning change to your Social Security could cause your healthcare costs to rise if you don't plan ahead. Then there's the lump sum. Retirees who qualify for a retroactive payment, which may be thousands of dollars all at once, but be careful, because this lump sum is considered taxable income in the year that you receive it. If it's not properly managed, it could very well bump you into an even higher tax bracket and increase how much of your Social Security is taxable too. However, there is a special election that you can make that allows you to assign the lump sum to the prior tax year, which could in fact lower your overall tax burden. But that's something you need to discuss with a qualified tax professional. And even if you're nowhere near the tax or IRMAA thresholds, well, you'll still want to review your withholding strategy or your quarterly estimated taxes. C. Higher Social Security payments might push you from owing nothing to suddenly facing an unexpected tax bill next April. So, now more than ever is the time to review, adjust, and prepare. Also, retirees who get their taxes done by friends or use DIY software, well, you should pay special attention this year. See, these changes might not have flagged automatically. So that lump sum payment and the potential shift in tax liability from previously untaxed benefits to now taxable income, well, it could be easily missed. And that could create a nasty surprise later down the line. So, my financial warriors, just before we take a deeper dive, it's imperative you hit that like button and subscribe so that you get notified the minute we produce another game-changing video that helps your financial situation. And I promise it will help and you will appreciate it. So buckle up and let's plunge a bit deeper. So the good news is there's a silver lining here. More income is never a bad thing, but it just needs to be managed smartly. Some retirees might use this opportunity to convert portions of their traditional IRA into a Roth IRA to minimize future tax exposure. Excuse me. Others may choose to delay withdrawals from other retirement accounts to stay within a lower bracket. And some will direct a portion of their new income to qualified charities, helping others while reducing taxable income. Now, smart tax planning can offset many of these issues, and it can ensure you actually keep more of the money that you've rightfully earned. Now, here's something most people completely overlook, and that's the impact on other income-based assistance programs. So, if you currently qualify for property tax deferrals, low-income energy assistance, or even Medicaid, well, your increased Social Security check could disqualify you. That's right, one government benefit going up can cancel out others you may rely on. So this isn't just about taxes, it's about your entire financial safety net. Now, before celebrating that higher check, please take the time to examine how your other benefits might be affected. It's a complex web, and one change can ripple across your entire retirement plan. Now, another detail to note is if you're helping a parent or an elderly family member manage their retirement income, this is something you want to keep on your radar. See, many older adults won't realize these changes have occurred until their next tax bill hits or a medical premium spikes. So having that conversation now, well, that can prevent major financial headaches further down the road. So now it's your turn. Are you one of those people who will finally get the full Social Security benefits that you earned? Or are you worried about how this might affect your taxes? Do me a favor, let us know in the comments below. And if this video opened your eyes to something important, please hit that like button, share it with someone who needs it, and make sure you subscribe, because we break down complicated financial topics to make your money work better for you. Thanks for watching as always, and we'll see you on the next one.